The S&P 500 just hit the 100th percentile. And the S&P at this level has historically marked a regime inflection. Something is breaking beneath the surface and the data confirms it. Right now, 10-year yield is at 4.45%, the 91st percentile for the past year. Historically, the 10-year at this level reprices every leveraged asset in the economy. Snider says the eurodollar system is tightening and nobody sees it. The data says gold rose 1.4% today, moving against the bearish consensus. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The commodity analyst has been right for 161 straight days. Here is the full scoreboard. Score 1 for the commodity analyst. Commodity supercycle. Oil agrees at $87.4. 161-day streak. Snider's dollar liquidity crisis call is paying off. Yield curve at 0.46% and trending their direction. 11 days running, Gammon is right and the data keeps proving it. Investment grade spread at 73 basis points. 3 days running. The volatility experts' volatility expansion call is paying off. VIX at 15.7 and trending their direction. Too early to call McIlroy right or wrong. The thesis is building but not confirmed. 160-day streak, Hartman is waiting on confirmation. The narrative holds, but the data has not validated it yet. 154-day streak, the dollar analyst call is not working. For now. Gold moving against the bearish thesis, up 1.4%. Score today, 4 right, 2 early, 1 wrong. A streak this long means the trend has legs, but long streaks end eventually, and when they do, the reversal is sharp. Today's big question, is the dollar about to surge, or is it topping out? Snider says the eurodollar system is tightening and nobody sees it. That is the thesis driving the debate today. It sounds right on the podcast, and it is a clean narrative. But here's the problem. Gold rose 1.4% today, moving against the bearish consensus. If the data is right and the speaker is wrong, positioning changes fast. Here's what makes this interesting. The dollar index is falling while gold is rising. Those two signals should not be going in opposite directions. When they diverge like this, one of them is lying, and the resolution is usually fast. The dollar index at 98.9, 65th percentile, down 0.1% today. Gold at $4,560. 69th percentile, up 1.4% today. Bitcoin at about $74,000. 27th percentile, up 0.2% today. Bottom line, the data is pushing back against Snider. Until the signals confirm, the thesis is early. If the dollar index breaks below 99, the milkshake theory loses its legs. Right now, it is at 98.9. If gold and Bitcoin both rally while the dollar holds, the liquidity thesis is wrong. The dollar index at 98.9 will track it daily on the scoreboard. Gold at $4,560 will track it daily on the scoreboard. Phase 1 is the good times, but good times do not last forever. Here is how close we are to the edge. We are 77 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points. Currently at 73 basis points. Pace is flat or improving, no urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has initial jobless claims, CF&AI flashing red. Snider says the eurodollar system is tightening and nobody sees it. The data agrees with that assessment. Phase 1 holds with 77 basis points of buffer. Conditions favor risk but do not get complacent. Wall Street trades the index. We trade the ground. Here's what the zip-level data is screaming about today. SD, days on market, is spiking in Sioux Falls. Days on market in Sioux Falls moved plus 99% in 30 days, now 232 days. Buyer leverage score, 64-100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. TX, days. Days on market is spiking in Hereford. Days on market in Hereford moved plus 99% in 30 days, now 193 days. Buyer leverage score 57-100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. New York, NY, payment burden is past the breaking point. New York, NY, median home about $743,000 on about $38,000 household income. Price-to-income ratio, 19.4. When the math stops working, sellers find out before buyers do. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, is the dollar about to surge or is it topping out? Let me show you what happened the last time we were here. Bitcoin at about $74,000, the 27th percentile. Notable, but not extreme. In 2022, Bitcoin fell from 69,000 to 16,000 as the Fed tightened and crypto leverage unwound. In 2020, Bitcoin crashed 50% in March, then rallied 1,500% over 18 months. In 2018, Bitcoin dropped 84% from its peak as the speculative cycle ended. Different environments, different catalysts, but every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, gold at $4,560 is in the 69th percentile. The last time both Bitcoin and gold were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. If history rhymes, Snider should be paying close attention because the clock is ticking on this pattern. Here is what the data says to do right now. Stay alert on VIX. It is dropping 3.4% today. Fast moves demand attention. Avoid Phoenix at 41% payment burden. That is stretch territory. Phase 1 holds. No alarms, but the runway at 77 basis points is shorter than last month. 4 out of 7 speakers are right. The commodity analyst, Snider, Gammon, and the volatility expert. When this many align, the trend usually has legs. Every signal is live at analyze.builderslens.com. The podcasters give you the thesis. We give you the scoreboard. Subscribe and I will see you tomorrow morning.